Hi, good afternoon, and welcome to Look Who's in the House with Michael. I'm glad to be back. It's been a little bit since we've done a podcast. We're all over social media. Don't forget to like, subscribe, and all that. Today I have a fantastic guest. I've got Dave Trabosh. Dave is a mortgage loan officer with Contour Mortgage Company. And we're just going to get into it a little bit. Going to get to find out how Dave ended up where he is, and then maybe talk a little bit about what's going on in the mortgage world or the home buying world, right? You heard it from me, now we'll hear it from a loan officer. So Dave, thanks for joining us today.
Thanks for having me, I appreciate it.
Yeah, it's good, man. Dave, where were you from? Where were you born?
So I grew up here on Long Island. I've been here my whole life.
Where?
So I grew up in East Northport.
Oh, did you go to East Northport High School?
Northport High School.
Northport High School?
Yes.
It's hilarious.
So I graduated a long time ago, but I've been on Long Island my whole life. I've been living in St. James since 2001.
So you have siblings?
I have two daughters and a wife.
And what about your brothers and sisters? Any?
Yeah, well, I have 2 sisters and a brother. Yeah.
Okay.
Yeah.
What kind of work did your parents do?
My dad owned a service station in Huntington. It was a automotive towing business, auto repair, gas station.
Where in Huntington?
Right in Greenlawn. It was really
I grew up in Greenlawn.
So right on Broadway, it was the Texaco station. So I don't know if you're familiar
Yeah,
where it was
over
between
by
Little Plains and Clay Pits.
100%. I used to walk up to that shop. My father, actually, we serviced our cars at that station many times, and it might have changed names. It may have or may not have been your father's, but yeah, I remember it. And there was a deli next door when I was a kid. We used to walk up there, get a soda and a chip. So yeah, that's my.
So my dad owned the commercial building right next door to that, plus the building. So he owned all that real estate right there.
Oh, that's cool.
So that's how I learned a lot about business, because you got to learn service. So I started working with him when I was 8 years old.
That's cool.
Yeah.
Did your mom have a career?
No, she did not.
All right, good. What about sports, music? What kinds of hobbies did you have?
I played football, baseball. I'm a big sports fan. I'm a big Ranger fan, a big Giant fan. But overall, it was a lot of just helping family business.
Yeah.
Like I said, when you grow up in a family business, it's 24/7.
Your labor.
Yeah, it is. But it was a good thing. You learned a lot of things that helped me out in the future.
So where did you actually live in Huntington or in East Northport?
East Northport.
Where were you?
Right off 5th Avenue. My mom still lives there.
That's cool.
Yeah.
So that's really interesting. You must have been really close to the cutoff of the school district.
So I am closer to Comac than I am to Northport.
Okay.
But I was right on the border.
Because I went to John Glenn.
Okay. So
and we had a lot of friends in Northport High School.
Yeah.
And when we would get bored, we would go hang out at Northport High School for lunch, and our friends would come and hang out at our school for lunch.
Yep. It's a very weird situation. The whole dynamics of the area, with John Glenn, Northport, and Comac, really, there was really cutoffs there.
Oh my God, I lived on a bicycle all the time, going down Burr Road, getting all the way down to town line. That's cool.
Yeah.
College?
Yep, I went to SUNY Brockport, all the way up in Rochester. It was very cold. I got to wear my winter jacket all the time. But I just, you know what, I always know I wanted to get in the business world. I didn't, want to continue the family business. My brother continued that, but I just wanted to find my niche, and then that's what I did from there, yeah.
That's hilarious. So I went to RIT. I graduated RIT, so we have a lot going on together
very
here.
Similar, yeah.
It's interesting. That's why I like doing these things. You learn so much about people you don't know. But I know what you're talking about, cold. I would dread in the winter getting out of my car in the parking lot and trying to make it across campus.
Yep.
Because it was crazy.
You went the jacket from October all the way up until end of April.
Yeah.
Probably for the last couple of weeks, and you were just, warmed up a little bit.
Do you ever get up there? You ever go away?
I haven't gone up in a long time. I've been up there.
I met, there was an alumni that reached out to me not too long ago. He's working at RIT. He's trying to pull some community together. And so we actually had a coffee meeting this week. He still lives in Rochester, and and they're going to try to pull some community together. It was nice. And, I have to go up for a wedding this summer, so he said, I'm going to bring you around campus, make it, call me, and everything's grown, So we were up in the area 2 years ago, my wife and I. We just took our bicycles to ride the footpath for the canal.
Okay. Yeah.
Just for a change of scenery. It was kind of cool.
Yeah, it's definitely, like everywhere, it's built up so much. I'm sure it's so different from when I was there. I'm talking, I graduated how many years ago? You know what I mean? It was a long time ago.
What kind of things do your siblings get into? Your brother took over your father's business?
Took over my father's business. He still runs a towing business.
Does he still operate it?
He still operates it, yeah.
From the same place?
Yeah, well, they sold the building. My mom sold the building, so my brother still runs it.
In Greenlawn?
In Greenlawn, correct, on Broadway.
Wow, that's amazing.
Yep.
That's amazing.
Yeah, and then my sister got into the mortgage business. I got her in the mortgage business a long time ago. I think she retired, and my other sister's retired now too. Because I'm the youngest of 4.
You're the baby?
Yeah, I'm the baby, yes.
So when you went to school, did you study business administration? Is that what your degree was?
Yeah. Concentration in marketing, yeah.
Yeah, so that's hard. My brother did that too. He went to Oneonta and then CW Post. And I would have been going to school for business, but I had an uncle that was kind of savvy, and he pulled me aside and he goes, you know, you kind of need to get a specific part in business, otherwise you generally, and you don't know where you land. And I ended up in the restaurant business, which I was in the business school when I got to RIT, but at least it was specific. And I saw when my brother graduated and he came out and he's like, I don't even know where to start. He ended up eventually going back to school, get a master's and become an accountant, a CPA and all the rest of it. But it's tough when you go into business because they don't really have a direction for you to go.
And that was the thing, like when I got out, everybody thought I was going to go in the family business, and I ended up turning around and working for Newsday for 2 years as a salesperson. And then I ended up getting a call from a family attorney who said, there's a mortgage company that's looking to open up here on Long Island. It was called Champion Mortgage. I don't know if you remember them from years ago. Yeah. They opened up right here in Ronkonkoma, right on Portion Road, and I got into the business. I didn't know anything about mortgages, and here I am 29 years later, I'm still in the business.
That's funny.
Yeah.
You when were you at Newsday? Remember?
1994 to 96.
I networked with somebody who was Newsday his whole career up until only a handful of years ago. He's downsized, and he was probably in marketing or sales. But it was Joe Giametta. You ever know
Doesn't sound familiar.
He's actually been one of my guests on my podcast. I'll have to introduce you to him through the podcast. You never know. Yeah. I know it's a big company.
Yeah. Yeah, it's funny. It's a small world sometimes. You never know who you run into. Yeah.
When did you meet your wife?
Funny story is I met my wife back in 2005. How I met my wife is I did her mortgage. So
you long out of college then?
So long out of college, yeah. You know what it is? My wife was career path, and so was I. We were basically workhorses. We met at the perfect time. My wife called me up, and she needed to get pre-approved to buy a home. And,
by herself?
Yep, correct. She was, she's a hard worker. She was working 2 jobs. She ended up buying a house out in Rocky Point, and through the process, I asked her to go out to dinner, and here we are now, 18 years later, or 19 years later with 2 daughters.
That's a great story.
Yeah, so when everybody says they're going to be my best client, no one's going to be better than my wife. Yeah. So everybody also says to me, you found a good person because you knew all about her, because you knew her credit and things like that.
You knew her value.
Yeah, correct.
You knew the debt.
Yeah, correct.
You knew the debt. What was she doing at the time when she was buying a house by herself? Because that's pretty,
So my wife's a PA. She's a physician assistant at Stony Brook. She works in plastic surgery, and she also had a second job working in Queens at a rehab clinic. So she was working 2 different jobs, and she had the mindset. Like I said, she wanted to make sure that she was comfortable. She wanted to do it on her own. It was obviously better than renting.
How old was she, do you think, when she bought this first house?
She was, this is 2005. So my wife was probably early 30s, probably like 30.
It's amazing, right?
Yeah,
think about it, it's really amazing.
Yeah.
One of the statistics I've been sharing on different social media things is the average homeowner back a couple decades ago, first-time home buyer was 28 years old.
Yes.
And now with the way things are going with the values of homes increasing and the high mortgage, higher interest rates, it's 38 years old. So it's really moved 10 years. It's very hard. And so, whenever I see a young person, I have a neighbor I recently met, she's in her 20s and bought a house on my block by herself. And it's fantastic how somebody can position themselves to do that. Because even though it's hard now, it was hard then too.
Yeah, correct.
People, my son will look at me, it was better then, you didn't have this. You might say that looking back, but when we were in it, living it, it was hard.
It's all relative, like the different times times of when it was, of when you first bought. Like I said, when I got in this business, market values were, 150, 200,000 in certain areas, 250, 300 tops. Now look at what houses are worth now. I saw a statistic yesterday that someone told me is that if you bought a house in 2019, your house is up 58%. Today.
Yeah.
So think about that when people procrastinate buying a house.
Right.
At the end of the day, it's the best investment out there. You get a tax write-off, and obviously, you get equity.
It's crazy, especially in our area. We've been averaging 10% a year in increased value. And even last year in Suffolk County, it came in at 15%. So, someone I sold a house to 4 years ago at 450 is in the 700 range if they want to sell the house now. So it's kind of crazy how that's running along. But
you can't time the market.
No. But I really appreciate and admire folks who are able to purchase their first home at a young age.
100%.
Very focused, very committed. It's not just about making money, it's about being on a game plan to put your money in the right place.
100%, because right now you can throw your money away as far as renting and things like that, and then people now, or young couples, are getting married and they're spending a lot of money on their wedding, whereas they could turn around and spend it on buying a house, down payment, cut back a little bit.
I tried that argument. My wife didn't fall for it. We had to go in and
I know.
What a waste of money, right?
You know what it is? Is it? You know what it is? Those are memories you'll have forever. But it's one of those things that right now is, with the cost of living right now, it's like you could probably save that and put it someplace else.
I think my children realize that there's probably more value in owning a home than a lavish wedding,
Yeah.
So,
Yeah.
how about yourself? How many children? Do you have children?
I have 2 daughters. Yeah.
How old are they?
16 and 14.
You're still in high school then.
Yeah. So one's a sophomore and one's a freshman. They're 15 months apart.
Wow.
One is just got her permit last month, so
Okay.
she's driving now.
Are you nervous?
Yes. Very much so.
Who's doing the teaching? You or your wife?
We do a mix.
Okay.
Yeah. I try to get, once again, we don't go all together, but at the end of the day, it's like everybody's got different ways.
My kids thought my wife was going to be the right one. They thought I was going to be the tough one. It turns out the other way. She was losing her mind in the car with them, and I was more patient.
Right, correct. Yeah, it's like you said, it's different. We tried, we worked it out as far as working in, walking, driving around in the high school parking lot, things like that.
Right.
But overall, she's been very good with that.
I remember the first time I got my daughter in the car, I trained both my kids how to drive on a clutch.
Oh, really?
Right.
Oh, wow.
So it's a little bit extra in the beginning, but once you learn, people who drive a clutch love it, right?
Yeah.
And the first time she gets in the car and I'm in the passenger seat, we're in a parking lot, and she's got to put the thing and let it go, and the car's popping like this. And she's just giggling.
Yeah.
With no consciousness of what's going on. I'm like, all right, stop.
Yep. You just got to teach them.
This thing's going on around us. You can't just giggle in a moving vehicle.
Right, correct.
Yeah. What kind of things are the girls into? They're in sports?
So my oldest one is travel soccer. My other one is travel volleyball.
Yeah.
So me and my wife don't see each other for about 3 or 4 months, because every weekend we're going someplace
It's hard.
else.
We did it too.
So I wouldn't change it for the world. Like I said, we love doing it. I'm gonna definitely miss it when it's gone, but it's a lot sometimes. But at the end of the day, it's like it's very good for them. Like I said, they have great teammates. They're enjoying what they do, and they found their passion.
I think our generation learned to keep our kids so busy with activities so they couldn't get in trouble.
Right.
You know what I mean?
And that's what kept me out of trouble. I say that all the time. Like when you're just not doing anything, those are the kids that got in trouble.
Yeah.
So at the end of the day, it's like we've been doing it since they were young. They did dance. They both did soccer. They both did volleyball. Now they're both. Unfortunately, you just have to pick a sport now. So now you just have to do volleyball and soccer, because there's too many conflicts if you try to do both.
I still remember on the weekend, 2 cars passing in a parking lot handing McDonald's bags through the windows to have lunch and dinner, right?
Yep.
But you know what's coming, Dave? When they go to college, all of a sudden you have your weekend back and you don't know what to do with yourself.
And that's the thing, I'm definitely going to miss it. Like,
Yeah.
that's the one thing, is that's what we talk about all the time. Like, when they go to college, if they continue to play sports or whatever it is,
Yeah.
like you said, hopefully they're close to a nearby airport, because all the kids now, they want to go down south.
I know.
They don't want to go north.
Does your oldest one probably is already making plans for schools, right? Applying
That's
and stuff?
correct, yeah.
Does she know where she's going yet?
She's narrowed down the schools. But
Out of state?
She went, out of state. She wants to go down south. She wants to be a teacher. My youngest one's not sure where she wants to do as of yet. Pharmacist, something with medical.
It's too early for her anyway.
Yeah. But she's trying to figure. They're trying to figure it out. We're trying to. They both want to play sports in college.
Right.
So it's one of those things. They're trying to narrow down what has their major, and obviously where they
Focus a
feel
little bit.
comfortable.
Yeah. At the end of the day, they just have to get good grades, be involved in their community, have extracurricular activity, and they'll fall out in the right place.
Absolutely.
Yeah, those
And
are all they have to worry about.
and that's the main thing that we're trying to instill in them.
That's great. All right. So, is your wife still work?
Yep. So my wife's a PA at Stony Brook. She works in pre-op services part-time, and then she has she works part-time at a plastic surgery office in Hopon. She does all the injectables, like all the Botox and all that stuff. So she has a really good, and plus she's a trainer. She has another job that she's a trainer for. So she has 3 different jobs. Yeah.
I can't imagine you guys have much time at the kitchen table.
Now, we eat late a lot, with their schedules and stuff like that, but we make a point of having coffee in the morning and stuff like that, but it's you know what, we know it's not going to last forever.
I know. Well, it's exciting. You're part of it. That's what we're here for.
Yeah.
And then you realize that, and I'm just really getting comfortable with the fact that my job was to raise a family.
Right.
I didn't know that before.
Right.
And now I'm seeing the fruits of that, because I have such wonderful kids, and they're close, they want to hang out all the time, and I'm realizing that that's really what it came down to.
Those are priceless moments. Like I said, when we go away for travel, and like I said, those car rides and stuff like that, like in a couple weeks I got to drive down to Virginia, so it's a 6.5-hour drive down to Richmond, Virginia, and it's like one of those things that those are the moments that you get in the car.
Oh my
you know what I
God.
mean? That you just remember the conversations that you can't get back. You know what I mean? It's priceless.
I'm thinking of those travel weekends to Philadelphia, Richmond, Boston,
Yep.
playing in the wet and staying in a hotel, and the stink of the soccer cleats and shin guards
Yes.
in the room on the fans, trying to dry them out.
Yep.
Just brutal.
Yep. Yes.
Man, there's just like trauma coming
Yes,
back, you
yes.
know?
It's very,
Pungent.
Yeah, it's very pungent.
Pungent's the word.
Yes, yes.
Let's go back to you. What did you do right out of college?
So right out of college, I ended up working in my family business until I found a job, and obviously I ended up working at Newsday as a salesperson.
How long was that before you got out of the family business? Was it a year or?
Not even. So
Okay.
like it was probably about 3 or 4 months.
Okay.
Because it's one of those things that I made an agreement with my dad that I wasn't, going to be. I'll help out on the weekends, but I just really wanted to get in the business world.
Sure.
It really wasn't my avenue to work in the family business that
Yeah,
way,
yeah.
but I learned a lot of values that way. And then I ended up working at Newsday for 2 years, and like I said, that's when I got into the mortgage business.
What was your role at Newsday again?
Salesperson.
So you had
So you had a territory, you went on the road, and you dealt with small businesses.
Yeah.
As far as
Delis,
advertising,
bakeries, walking-
right?
yeah,
For
okay.
advertising, and you were creating stuff like advertising. Yeah.
Okay. Oh, okay.
Yeah.
Did you like it?
It was good. It was nice. You know what I mean? I was on the road a lot, which is kind of like this business. You're always going around meeting people. So it was nice. But you know what? You heard the ins and outs of business, which I don't do that obviously anymore. But I could see it with the economy, how it affects people's business.
Yeah.
A lot of businesses are seasonal, and they have to make a home run near Christmas time or the holidays, and then then they slow down in January and February, and then they got to hang in there for those different times.
That's a really good point, Dave, that you saw that and you're making that. Because a lot of folks have careers and jobs where they don't see what's going on in those kinds of businesses. You go in on Saturday and it's banging because it's Saturday, everybody's
Right.
off. But what about Monday, Tuesday, Wednesday,
Right.
Thursday? It's a
Right.
different thing. And I think that's a really good insight to understand, and especially helpful in you in understanding how the economy's going, how it affects your clients.
It's also in this business also, because you think about like different times of the years. November, December, January, February is normally very slow. So you have to budget yourself for those times, and you have to revamp yourself and come up with a different marketing because when the spring hits, like right around now, the market opens up. There's a lot more inventory that comes out. People start listing their houses more because obviously they're looking to sell at the end of the school year. And people come back out they come out of hibernation for the winter. You know what I mean?
You're not kidding. I'm just coming out of hibernation myself. Really, this February was terrible for me, and I've already said that on camera a few times.
Yep.
This
Yep.
one was brutal.
Yep.
But I don't even care about the temperature. The sunshine is what makes me, really uplifts
Correct.
me. What happened after 2 years that made you open-minded to changing jobs and getting into mortgage? Why? Why?
You know what? It just the opportunity arose. I mean, like I said, I got a call from a family friend who was an attorney and said this company's opening up a branch on Long Island, Champion Mortgage. I didn't know anything about mortgages. I didn't know anything about anything. I ended up going to Parsippany, New Jersey, and interviewing there. It was 5 interviews, believe it or not. And then it was a great 2-month training program that I was in. So I learned the right way. I didn't just have somebody hire me and just say hit the street. You learn the ins and outs. It was the greatest training program I ever had, because at the end of the day is you got there and you were in every different department. You know what I mean? Like marketing, accounting. You spent a week in every different department to know what everybody did in the company.
Do you think mortgage companies still do that kind of training?
No.
Or they just grab the next guy from the last mortgage company?
Yeah, it's a lot of it. I mean, it's hard because you know what? Miracles don't happen overnight. In this business, it's about relationships and it takes time.
I know.
And unfortunately, people can't wait around for that. I hate to say it that way, but that's what it is now. They don't have time. But if you have time and you're in this business, you won't start, creating relationships. It takes time.
Yeah, and our business is the exact same business. We're tied together, we're linked together, and the flow is the same, the marketing, all of it's the same. And that's an important piece because every time the market gets hot, you see all these real estate agents pop up. and think they're going to make a quick buck. And
Yep.
it really isn't like that. First of all, you got to be savvy and smart. You got to understand what you're technically doing. Then you have to have the people skills. And then most importantly, you have to have the relationships, and you're not getting them overnight.
100%. And that's the whole thing. Like when you look at this industry the way it was, I got in this business in 1996, and think about everything with the subprime, everybody hopped in. You didn't need to get licensed or anything like that. You could kind of do what you wanted. And like you said, it was like the Wild Wild West. And they were giving out mortgages to people that weren't qualified.
Right.
We all know what happened.
Yeah.
But at the end of the day, it's like, you know what? Fast forward, there was a drop of 20% of loan officers this year, just like probably in your business.
I'm hoping.
And at the end of the end of the day, the strong will survive. You know, it's about experience, but everybody wants to hop in when it's the hottest
Yeah.
thing. But then all of a sudden, what happens when the rates go up? You know what I mean? And obviously the market slows down. There's no inventory. What happens? You know what? It goes back to basics. You got to go back to relationships.
We just saw it. Everybody got in, and now everybody got out. And,
Right.
and the way they measure it for us is who's renewing their licenses, who's renewing their dues for LIBOR and all the rest of that stuff. So the same thing with you.
Yeah,
mortgage?
it's quality, not quantity.
Yeah.
You know what I mean? At the end of the day, we're all a reflection of each other. That
Yeah.
works for, say, Contour. And so at the end of the day, we all have to do right, or it'll be a problem for everybody.
There is no overnight quick buck unless we're talking about Bitcoin. You know, I mean,
Yep.
really, because it's everything out there is relationship building, and I'm a little late in life to really capitalize on that. Always had relationships, but I don't think I understood the value of them when I was younger, earlier in my career, as opposed to where I am now, and really seeing the benefit of having those relationships and people who really understood that value very young and built on that over their career. So it's
And that's the thing, that the key to my business has always been my previous clients. Like I do mailers to my old clients. Now their kids are buying houses. You know what I mean? I'm old school with the mailings and stuff like that. My family, we sit on the living room floor and we stuff envelopes. And you know what? It's a family thing. You know what I mean? It's one of those things that's how I've always done my business, because I just feel like, I've done right by these people. So at the end of the day, I'm hoping that they refer me their friends and family.
How long were you with that mortgage company before you changed?
So when I went to Champion, they were a refi place. So all they did was refis. So I kind of saw the writing on the wall that I need to get into the purchase business. So the end of the day is I ended up leaving there because I didn't want to put all my eggs in one basket. I was like, you know what, I got to get into purchases, refinances. Do you want to be with a company that does everything? So I ended up going to another mortgage company in Merrick, small mortgage bank, same thing. That turn around and could help me out as far as building my business that way. And it's relationships, hitting the road, you know what I mean? Going out to realtors, accountants, businesses, just trying to put your name out there. So, before when I worked at Champion, it was a lead-driven company.
Mm-hmm.
So they just, every day you came in and there was 4 or 5 leads on your desk.
Right.
But that wasn't, it was great. But at the end of the day, it's like, you know what, that wasn't going to help me. You know what I mean? You had to, it's great for some people, but you have to create your own business.
In addition to the point you just made, earlier in your career, we weren't as digital.
Right.
And you really had to have that. Today, digital is replacing a lot of those techniques and skills because we're all socializing through social media. We're just not building the relationship the same on social media. We're learning about each other to some degree because we put out what we want to put out. Nobody wants to put out they're having a bad day. So we have a window of what we think their life is, but it's not the same as interpersonal relationship.
Well, that's the thing. The business totally changed with the pandemic. It really changed everything. Like, I'm old school. I love to sit down with people face to face. It's the biggest thing you're ever going to buy. The pandemic happened, whereas nobody wants to sit down face to face, and everything went digital. So now all of a sudden everything is e-sign. I talk to clients on the phone. Everything's done through an app. They upload all their documents. You talk to them on the phone. Whereas years ago, I used to say my second office was Panera Bread, because I used to meet people at Panera Bread. It was a big place. You could sit down, you could have a conversation, go over all the documents, answer any questions. You know what, we got to go back to that, because this is the biggest thing they're about. They need to know what they're buying and what the steps are. It's hard to explain it when you're only dealing with one person and the spouse is, not around. And if we sat down for an hour, we could come up with a whole game plan.
There's a lot of trust needed here. We're buying the biggest purchase of most people's lives, right? To think that you're only going to have a telephone relationship with somebody and never really know who's on the other end of that phone, a little frightening.
Well, think about you guys. You go out to a house, right? Open house, you're on the line. How long are they actually in that house?
Yeah.
10 or 15 minutes?
Right.
And that's the biggest thing they're going to buy. And you're asked, in this market, limited inventory, they probably get to go over asking price. So at the end of the day is, you want to make sure that it's the right fit, but there's a lot of things that go in. And like I said, if you have all your ducks in a row by sitting down with me and knowing what the next step is, and knowing that, you find a house and this is what happens from here, you explain the steps to them, it makes it a lot easier because everybody gets amnesia. They forget.
This is a complicated process that's less complicated when you work with professionals that have a team, right?
Right.
And most people who do what you do or what I do, their heart's in it. They're honest people with integrity, and they want to do the right thing. But I insist on having a consultation with somebody eyeball to eyeball before we ever go out there in the field. I don't want to meet somebody at a house.
Right.
I don't want to unlock a house, not know who I'm walking in the house with.
And you also have to talk to them as far as first thing you should say is, have you been pre-approved? Because at the end of the day, I hate to say it this way, but buying on Long Island is very expensive. And at the end of the day, ratios are really tight here. Because at the end of the taxes are expensive, the prices are expensive. They need to know where their price point is, so that you're not showing them a house that they might not qualify for.
No.
You know what I mean? Like, that's the thing, is because right now, if you're qualified for, say, a $700,000 house, okay, you're probably gonna look at that house around the low sixes, right? Or 650, because it's probably gonna end up going to 700. You look at $700,000 house, it's probably gonna go for over 750 right now in this market. So you know what, you gotta set their expectations, because then they fall in love and they're like, well, I'm pre-approved to 700,000, but you don't understand that $700,000 house is gonna go more. Unfortunately, they gotta learn. You know what I mean?
It's good that you said that too, because I try to explain that to my clients when we go out, and they're like, you know, really? But they have to fail a few times to really buy into the fact that generally speaking, these homes are priced 5%, maybe even 10% below market value.
Correct.
So if they're priced correctly, you're gonna get a little bit of a buying frenzy, you're gonna get it multiple offers, and you're gonna drive that price up. And so, yeah, you get a pre-approval letter for 700. I, as a realtor, need you to set your filter at 625, 635, because if you're looking at 700, go ahead and make an offer, but you're not competitive.
Right, exactly. And they look to you for guidance. And my thing is that I'm available 7 days a week. This business is, you know, all the weekends, most of the weekends, as far as running pre-approvals and running numbers with the clients. Because I want to make sure that they feel comfortable, because the last thing you want to do is fall in love with a house and then unfortunately you don't qualify, or you don't feel comfortable with the payment. I'm all about the payment, especially buying on Long Island, because like I said, house includes the mortgage payment, but all the other things that go along with it.
PMI, taxes.
Yes, taxes, homeowners insurance, you know, gas, electric, cable, car insurance. And then if you want to start a family, you know, that's very expensive too.
Yeah. I was just thinking about, you know, I have a couple buyers in the last year that kind of want to bum rush the process. I'm telling them, we need to meet. I have some things I need to teach you about, educate you on the market, what's happening, rule changes. There were a lot of rule changes last year in the way we did things. And of course, then there's some disclosures that have to be done. And it's just better to be prepared before we get out on the field. And they're like, yep, sure, we'll meet next week. Oh, by the way, we see this house, we want to see it tomorrow night. Can we go see it? Like, why? I mean, you're not buying it. You don't need a pre-approval it. Even if you want to buy it, you can't get it. It'll be sold by the time you get it.
And that's the thing. That's the thing as an agent. Instead of spinning your wheels and running around with people, and maybe that they don't qualify or they don't feel comfortable. Because my thing I say to people all the time, what do you feel comfortable every month with your payment? And I do the numbers backwards.
Yeah.
And then you kind of tell me where you're looking, like what town. I have a good idea since I've been here my whole life.
Yeah.
What the taxes are, and run some numbers so that they understand that, you know, these mortgage payments, you know, they're pushing the limits. You know what I mean? And I don't think people realize from living with mom and dad to all of a sudden you go into a $5,000 mortgage payment.
Oh, I could prove that.
Yeah.
I got a 32-year-old son who's useless on my couch. He moves out into his own house, the lights are off, the thermostat's set at 60.
There you go.
And he now understands what this stuff costs.
Yep, you try to teach them the value of money. They don't understand it. You know, it's a different world now. You think twice about going to Starbucks. You know what I mean?
He's got to put oil in the tank, right?
Yeah.
So they're trying to run it until it's, you know, because,
Right.
you know, you're paying for the commodity, it's sitting in the tank. It's
Right,
not
of
like
course.
natural gas where you pay for what your consumption is. So
Right.
I find it hilarious. It's
Yeah.
funny.
Yeah.
All right, let's talk about Contour. How long have you been at Contour Mortgage?
So I've been at Contour 9 years. We're a small mortgage bank as far as that, and you know, like I said, it was probably the best move. This is my last stop.
You say you're a small mortgage bank, but I see Contour signs all over the island. I was at an event today. The Contour had a table set up. I didn't see it, you know?
We have different branches throughout Long Island. Our main headquarters is in Garden City. We have different branches throughout on the South Shore and North Shore. So we have a good presence out here.
What would you say, there's a lot of banks out there, just like there's a lot of realtors out there. It could be overwhelming for a buyer. What would you say are some of the competitive edges or reasons why Contour is a good bank for some buyers to use?
It's definitely the service that we give. I mean, like I said, being a small mortgage banker, we have a lot more flexibility. We don't require COs. We can get things done very quickly. Like I said, through the process, all you deal with is me and my assistant, Natalie. That's all you deal with. You go to other banks, you're just gonna deal with the gamut of people. whereas this is more personalized. Like I said, and it makes everybody feel comfortable. Like I said, being available 7 days a week, we're all in the same boat together.
Yeah, that's a good point. So like in the bigger banks, someone, like I have loans with Chase, right?
Sure.
So someone initiates the loan and then it gets handed off and I'm dealing with an underwriter, I think, right?
You deal directly with the processor.
Right.
And then obviously you deal with another person. So it goes through, I've experienced it because I want to see what my clients went through. I've done that. I've put in applications, believe it or not, and just saw what the process, how the process works.
Yeah.
So at least I kind of understood what they're dealing with. So I think it's priceless when you're dealing with somebody, when you're dealing just with the loan officer and the assistant. Those are the two people you're going to hear
from. So you're the
not
communication, right.
You're not going to hear from everybody
else. Any questions, anything that's happening is coming through you.
Correct. And like I said, when it comes to pre-approvals, available 7 days a week, you're going to deal with me on the weekends. I'm available, like I said, I may travel and stuff like that with my daughter's sports and stuff like that, but my phone and my laptop are with me at all times. At the end of the day, it's, like I said.
I value that because you're the relationship person, so handing it off or not being connected, it makes you feel disconnected a little bit.
You referred me as far as, I don't want to pass you on to someone else.
Yeah.
That's the whole thing. Like, you and I do business so that I'm a reflection of you.
I had a guy come to my house last month talking about solar rebates and all that. So he comes out and we're talking about things I need, things he needs, and we have a whole plan. And then the next person that comes out is a mechanic, an engineer. It's going to go through the house and make sure the electrical's right, the roof is sturdy, and all the rest of it. Then there's another guy, and then there's another guy. And then when the time comes for installation, the person who started this with me will not be there.
Correct.
So whoever's installing will not know the things that were important to me on that day. And I stepped away right away. Yep. Because there were certain priorities that were important to me, and there were certain priorities that were more important to them. And I didn't think my priorities were going to get hurt, especially in a handoff. So
right, and that's the thing is that's one thing I've always done. I'm like I said, there's people in my business that just has a team and they just delegate it. You'll never hear from that person again. You're doing business for me, like I said, and I think that's priceless, especially when it's your most important asset you're ever going to buy.
Let's talk about today's market. We are in New York. We are in Long Island. This is the first quarter of 2025, and I only say that because I don't know who's going to watch this video today, but real estate's hyperlocal. It's different everywhere in the country. I cringe when I read headlines. I cringe when they have news stories on the TV because what they say only applies to a small amount of people. It's not a blanket that applies to every part of the country. We could see statistics in Florida that the state of Florida is growing inventory fast, the prices are dropping fast, right? But that's the state.
Right.
There are areas of Florida that are not doing that are still have low inventory, very competitive, pricing is high. And so you really have to be hyperlocal and really understand that. Let's talk about our market here right now, Long Island. What's the mortgage? What does the rate look like? What's the prediction for rates this year? Where are we going to be?
So everybody predicted that the rates after the election were probably going to go down. Okay, at the end of the day, I think everybody came to the realization that we're probably going to stay between that 6 and 7 range this year. The average homeowner out there, 90% of homeowners have a rate of 4%, an average of 4%. So that's what's stopping them from putting their house on the market. So we need more inventory in Long Island. We have the buyers, we just have no inventory. So I think they came to the realization now that they're going to stay around there. There's always the opportunity to refinance in the future. I mean, obviously buying is going to be better than renting.
Is it still true to marry the house and date the rate?
Yeah. Because you know what it is, when I got in this business, rates were 9%, and then it went down to 7.5%, then it went to 6%, and we all know what happened with the pandemic, going down to 3% or even cheaper, right? Now I have clients who bought that house during the pandemic, now they want to move. But now with the interest rates where they are, their mortgage payment's up about $1,500 to $2,000, they're not moving, okay? So at the end of the day, we're in a stalemate right now.
We are.
So it's very challenging right now, and like you just said when you brought up with Florida and other states, they're building because there's land. Long Island, there's no land. So there's no building, and when there's building, I mean, it's big prices.
Well, and I've been saying that a bunch too. We do have some restrictions here. We're an island.
Right.
We're surrounded by water. So right there we have a natural boundary.
Right.
We have areas that are densely populated that there is no more room to build. We have areas that are protected, parks, waterways, things like that, not going to build.
Correct.
Pine barrens, not going to build.
Correct.
Affluent neighborhoods, they're not subdividing, cutting these properties down. They're not going to let you build multiple family housing in those neighborhoods.
Correct.
So where are we going to build? How are we going to build?
Right.
And then if we are going to build, what's happening with the cost of construction and materials, and there's a lot going on out there. I want to kind of understand, why did we think rates would be better after the election, and why aren't they? What's happening?
It's a tough scenario. Like I said, it's really hard to predict what's going to happen. Everybody just thought that the inflation that it was all going to cool off. Affordability, like I said, they do have to bring down the rates for affordability to make people want to buy. I mean, the cost of living now is very, very expensive. So I think everybody automatically thought with the change in the presidency that it was going to definitely change everything. Either way, I thought it was going to get better. I mean, just because rates were touching 8%. 14 months ago, you know what I mean? And now obviously we're looking in the mid to high sixes right now in this market right now. But I think everybody came to the realization, all the analysts said, no one can predict what the analysts, they keep saying different things of what's going to happen. No one knows.
Your company and my company have been measuring and watching the financial metrics, and we talk about it and we report on it and we learn about it so that we can understand how the markets work and to teach that to our clients. Every prediction for the last 2 years prior to election was we should be between 5 and 6%. It's going to be next quarter. There's going to be 2 rate cuts. It's going to be this, and we're all looking at the Fed. We're all looking at the Fed, but the the loans, the mortgage rates are not indexed against the prime rate. They're technically indexed against the Treasury bond, right?
That's right. The 10-year bond. Yeah.
So why isn't it following the bond? Why does it feel like it's following the prime? Any thought on that?
It's tough.
Just like economic forecast?
Each economic forecast, it's like so hard to predict. I don't have any analysts to it. At the end of the day, is prime. You know, when they lower prime, it affects your savings, your checking. Okay, it also affects your credit cards. Okay, it doesn't affect the long-term interest rates. So that's everybody thinks when they lower the prime rate, everybody says, "Oh, my rate's 0.25% better." It's not. It doesn't work that way.
Do you remember when you were a kid and you were taught to have a passbook savings account and you would make some money cutting a lawn and you'd put some in the bank and you learn how to save, right? Well, the interest rates went up, but did the savings account rates go up? They really didn't.
They didn't go up much.
They really didn't,
If
right?
you look at your savings account and what you're getting as far as interest,
there's no encouragement to save.
Right.
I can remember savings accounts rates at 7 to 8%. And to your point that you made a few minutes ago, 35 years ago, when I first started looking for a house, interest rates were double digits.
Yep.
I mean, 13, 11.
1981, they were 19%.
It's like buying a house on a credit card.
Yeah.
Right?
Yep.
I bought my house in 92, and the rates came down, and we got it at 8.5%, and I was thrilled.
Correct.
Because over the last 7, 8 decades, 8% was seen as 7 or 8% was seen as a really good rate.
Right.
Here we are now, 2025, and the attitude about 7 or 6.75 is horrible. It's so high. I think we got a little spoiled to what happened pre-pandemic and during the pandemic. Pre-pandemic, my understanding was the government was trying to keep the rates down. They were buying treasury-backed bills to help artificially push the rate down.
Right.
And then we stopped doing that. Right about the time of the pandemic? Right?
Yeah.
So now you have the government's not interfering with that now. Market forces is kind of doing its own thing. The pandemic comes, puts its own spin on things. I had an attorney during the pandemic tell me he closed a loan at 2% first time in his career.
Yeah.
So that was for a minute.
Yeah.
But you're right. 70, 80, 90% of the people now that have mortgages are sitting on 4% mortgages.
Yeah.
They want to move.
I really think that the sweet spot is to get more inventory would be 5.5%. That's just my opinion because I feel like it's psychological to them. They can go up 1.5% if they were at 4%, and they could do it when they're paying almost, 2.5%, 3% more. They just can't distinguish moving.
On top of the high price.
Correct. Top of the high price. But they're ahead of the game in regards to they're gonna say at the height. They buy at the height, they sell at the height.
Yeah.
It's the first time home buyer, just trying to get into the market.
I know.
You know what I mean? Like I said before in the beginning, is 58% in the past 6 years. Since 2019, your house has increased. 58%. So all those people that I have clients I'm working with for 2-3 years now, doing pre-approvals, they keep missing out houses for all little things. Maybe it's $5,000 or $10,000. You never know what the difference is. They don't know if they don't talk to me. They're missing out if you increased, your offer $10,000. It's about $65 a month. Is that make or break? I don't know. But at the end of the day, it's like, fast forward is if you bought that house for $10,000 more, what it's worth now, I think it's a pretty good investment to invest that 10 grand.
Think about that first time home buyer. We were once 28 years old. Now it's a 38-year-old, right? Let's say you're buying a house for $600,000. And quite frankly, in our area, there are not a lot of good houses at $600,000 anymore.
Right.
Those houses used to be $390,000, right? So now you buy a house at $600,000. You're going to put down 20% for down payment and mortgage the other 80%.
Right.
So now you got to come up with $120,000 for a down payment.
Yep.
If you look at closing costs, and I think we use an average number of 5% or so.
Yeah, they use between 4 and 6%, correct.
All right, so we'll just say 5% of
30,000.
30,000.
Right.
You get the 120, 30,000. You need $150,000 to get the key in your hand. How is a young person going to accumulate that kind of wealth? Right. The average person is not making that kind of money.
Right, correct.
So it's a little challenging, and I think a lot of parents are getting in. I think we see a lot of cash sales too.
There's a lot of cash sales because a lot of people are downsizing.
Yeah, the cash sales are our age group community.
Right, that are turning around, selling their house. They built the wealth so that they're doing that. The first-time home buyer is not paying cash. And you know what? You feel for the first-time home buyer because they're looking at a price point of where that person wants to downsize, and they can go in with cash, whereas the first-time home buyer is turning around and, you know what? They're only putting down, say, 5 or 10 or 20%.
This is the other problem, too, in negotiating. So when I talk to my buyers about terms, not just the dollar amount that we come with an offer, it's terms. How quick can you move? Do you have anything to sell? What's your down payment like? What are your credit scores? Things like that. The buyers either limited in cash or want to hold the cash. They go in the house and paint and do things, right? So they may be qualified, but they're willing to put down 3.5%, 5%, so they can retain some of the cash, or they just don't have that cash. So now they have the money, they go to bid, they get a house, and now we're worried because the house went over asking price.
If it's going to appraise.
And can it appraise? Right. Because when you have less skin in the game, that appraisal becomes very, very sensitive.
And that's what's hurting them. Like I said, it really is, cash is king. Like I said, they really need to save up money because if you only have a minimum down payment, it's going to be very challenging to get that offer accepted.
Some listeners will not understand what we're talking about by not appraising. Can you explain why less money down makes that appraisal thing a little dicey?
Yeah, so if you bought a house for, say, $600,000 and only appraises for $575 or $550, there's a shortage of $50,000. So at that time is either you have to come up with a shortage, okay, try to renegotiate the price, which is very challenging in this market, or take a higher loan amount, you know what I mean, depending on what you were putting down and pay mortgage insurance. So it's one of those things that there's a whole criteria to it. We don't know until we get the appraisal. We order the appraisal like right away. As soon as we have signed disclosures from the client, we order the appraisal right away to contact you to go out to the property so that we can address any situation. We deal with local appraisers. So the end of the day is like, obviously they know the market. We don't send somebody from the North Shore to the South Shore or vice versa, or Nassau to Suffolk, because it's very challenging in this market.
My experience is the appraisers are keeping up. They're having the same problems we are.
Right.
We don't have a lot of
There's not a lot of
examples
inventory
to look at.
Right.
There weren't that many sales in the neighborhood in the last 6 months. The appraisers know the market's running the way it is. They're trying to make sense of it too. I think what I would want a buyer to understand is to be competitive when there's 5, 10, 15 offers out there. The seller is not just going to look at the person who's got the most amount of money. They're going to look at who has the most skin in the game because they want to be able to get to the finish line. And very often when you come in with a low down payment, the seller is likely to jump to somebody who has a better down payment, even if they're offering less money, because they're more likely to get to the finish line. They're more likely to not come short on an appraisal and have issues.
Well, because it makes the seller nervous that they don't have the money in case it doesn't appraise. So a lot of times you guys are asking for proof of funds, you know, just in case. You need to cover all bases because remember, the seller doesn't want to be locked into a buyer for 45 or 60 days and find out they don't qualify. Then it has to go back on the market again.
There it is.
And who knows what could happen with the market.
And that's the piece. That's why the seller's attitude is to get somebody who's a higher down payment so they can get to the finish line because they've already been through the sale process. It's exhausting for both sides. Even when it's perfect, it's exhausting. Mm-hmm. Now you go through the sale process, you go into contract, and you're in a 45 days, 60 days, and all of a sudden the thing falls apart. You have 3 months lost. You have to now go back on the market, start all over again.
And who knows what the market could be at that time.
That's right.
Like I say, who knows what interest rates could be at that time. And a lot of times there's so much uncertainty, like you just said before. You know, timeline, you know what I mean? Like I said, it's one of those things that the sooner it gets done, the better for the seller. You know, when I sold any of my houses and the buyer was ready to close, I would pack up the house all night because I was like, you know what? Anything can happen.
Sure.
You know what I mean? I just, you know, let's just close.
So today, for a long time now, we need buyers to know what they can spend. You can't go shopping without a wallet in your pocket. You really need to know. So we tell them they have to speak to the loan officer first. Otherwise, we're shooting in the dark. We're putting up filters on these real estate websites. How do we know what dollar amount to put in? You're guessing if you think you want a $600,000, $700,000. You're guessing you can afford it. You really don't know.
They don't know their numbers. That's the whole thing. Like I said, having a conversation with me, I see everything that they can afford. And before you spin your wheels, that's the first thing you should say. Have you been pre-approved?
Yeah.
And then if they said they haven't, be like, you got to call a loan officer. You got to at least have that conversation to see what you qualify for. when we qualify somebody, we see the income, the assets, and run the credit, and we need to know exactly what they qualify for, because like I said, the last thing you want to do is be running around with a client who really loves the house and they can't afford it.
It's very empowering, because here's the other thing that happens. Sometimes people start going out on their own. I see them come to open houses. We're just starting. We're not ready. We're just starting to look. But you don't have. If you walk into that house, you go, oh my God, this is a dream house. This is the second house we walked into. We weren't ready to buy. It's our dream house. We're going to go for it. You can't, because we're going to sell that house so fast. By the time you get your affairs in order with your loan officer, get your pre-approval in hand, it's not the pre-approval that takes time, it's getting your documents ready for documentation to supply you.
Well, that's the thing, is that I get those crazy calls on Saturday afternoon when I've been waiting to hear from this client for weeks, and now all of a sudden it's like they found the house, and they're like, what do I need to get the pre-approval? And I'm like, you need to send me this. They're like, how am I going to be able to get that together? But we've been talking about it.
Right.
So at the end of the day, it's like, pre-approvals don't take long. Like I said, it's one of those things that reviewing the documents and running the credit and going over the numbers, that's not a problem. It's just a matter of you getting the documentation together, having your ducks in a row before you go out. You know what I mean? You gotta know what you qualify for, because like you said, you're gonna go into the house, this is the dream house, and you know what? Then they're locked in on the dream house that maybe they can't afford, or don't qualify for. I know I keep saying that, but it's big.
I always ask my clients, or future clients, especially when they're selling, to please engage me when you're even just thinking about it.
Right.
Don't wait until you're ready to make the sale and then contact me, because I have coaching things I can give you along the way to maybe keep some money in your pocket. I have a family now that I know I'm selling their house next year. They haven't brought me to the house, but they're over there painting. They're starting to change. They're spending a lot of money.
Yeah.
And I'm not sure they need to.
Right, correct.
In a market like
market,
this that's
right.
running so fast, if the house is in a certain condition, I can often just tell them, we'll put some blacktop sealing on the driveway. We'll freshen up the flowers. There's things we can do that are cosmetic.
And a lot of people are going to go in and change that stuff anyway. Yeah. You know what I mean? They're going to definitely do their driveway, like you said, but as far as painting, they're going to change around to what they like.
Right, so same advice for a mortgage person is to get with them early, before you're ready to hit the market. Go through your finances with them.
Even if you're not looking to buy something tomorrow, you're looking to buy something 6 months, a year down the road. Maybe when we run the credit, you need to work on something. Maybe with the assets, maybe with the income, figuring out like what you qualify for. It's like having a game plan. The whole thing is that you have to have a game plan in this market before you start to buy. Because like I said, I get those crazy phone calls on Saturday and Sunday afternoon, and it's a fire drill.
I was going to say it's a shit show, but
it gets a little challenging. But like I said, that's what the flexibility is. Like I said, being available 7 days a week, that's what it is. You're doing business with me, and like I said, knowing your numbers. You need to know before you put in the offer what your mortgage payment is going to be.
And you need to have that relationship with your loan officer, because you might see a house that's a little less money and the taxes are a little higher. Does it still work?
Right.
Or it might be a little more money,
right,
but the taxes are low. Does it still work? You need to be able to have that conversation, fluidity.
And that's the thing, is like you said, when people say, where you're looking, and they say, I'm just looking on the North Shore, well, it's very wide range, right? But if you said, I'm going to be looking in Setauket, St. James, Smithtown, I kind of have an idea of the taxes. You want to be in that
right,
that realm. So it makes it a lot easier qualifying wise, but the taxes range so much from house to house. So when people say this, you can go online and you can get a general pre-approval from people that you see online or on TV, but at the end of the day, they don't know the New York market. They don't know the taxes. They're putting in taxes at $5,000. You don't find taxes at $5,000. You know what I mean? So they need to know that, but you could just plug things in. You want to deal with the expert.
Quite frankly, a buyer is way more savvy after having spoken to the loan officer and really understanding that part of the process.
Yeah, and once again, not to Google everything. Everybody wants to Google everything. I Google a lot of stuff, but at the end of the day, you got to go to the experts, because the end of the day is like, you know what, your head will spin if you look online and you start watching this video and stuff like that. That's how the world lives now.
Well, and everything's not absolute. Banks have different products.
100%.
Most of the banks share most of the similar products,
right,
but most of the banks also have one or two specialty things that they can offer.
Right.
And those aren't going to be on Google. You
right,
really need to talk to your loan officer who can understand what your situation is. You maybe own your own business, maybe you don't have your income documented
right,
as well, and you need someone that understands how to work through the system to get you where you want to be.
And we have all those products. We have all those products that are out there for first-time home buyers, for self-employed people, and that's what makes it different. Whereas other lenders, they just want the vanilla client who's W-2 employee, 30% down, perfect credit. Whereas we do those, but at the end of the day, not everybody's in that realm. So at the end of the day, you got to have a product. You know what I mean? Because then they call that lender and they say you don't qualify, then they stop looking in general. And that's why you got to say, as a realtor, you say, you need to get a second opinion. Just to, if, maybe there's something that maybe I can't do either, then they heard from two different people. Because that's the thing, is that they get so discouraged because they walk into their bank that they have their savings and checking account with, and they think that they don't do that product.
Does it ever come along that you get a client that you just don't have the right product to fit what they need, and you maybe have a referral that you can bring them to somebody else?
100%.
Yeah.
100%. There's some niche lenders that are out there that do certain things that we don't do.
Yeah.
So at the end of the day, is like I said, I'm doing this a long time. A lot of different relationships go back and forth. I don't do commercial financing, right? I don't do commercial loans. But you know what? I have commercial people that I know that can refer me to their lenders and vice versa.
All right. I want to get close to wrapping up. I feel like we're coming up on time, but what kind of advice do you have for the first-time home buyers for this year? How should they approach the market? What kinds of activities should they do? Certainly if you own your own business, you have to provide 2 years of tax returns. Maybe you need to start talking to a loan officer early to make sure you impact the next tax return you do to get a different result.
So that's the thing, is that we'll go to self-employed first. Self-employed person right now, this time of the year, it's early, quarter of 2025. Before you file your tax returns, and if you want to buy something this year, if you're self-employed for more than 5 years, we only need 1 year of tax returns. Okay. So instead of 2 years. But you know what? Talk to your accountant before you file and make sure we can make the numbers work so you can buy a home. But there are other products out there that are bank statement loans with the business. I'm not going to bore you with that, a profit and loss. But you know what? They get so discouraged that they're never going to be able to show them because they don't show it. Their products are slowly coming back. These loans perform, you know what I mean? Because they're self-employed, they just don't show the income, you know? And as far as for first-time home buyers, don't get discouraged. Like I said, you want the American dream of buying something, and like you said, with the average age of 38, if you can get before then, you're ahead of the game,
What's happening to those buyers that are sitting on the sidelines saying, I'm going to dip my toe in the water when the rates drop? What's happening to them?
So that's the problem, is that they've waited so long. Like we said before, I have clients dealing for 2-3 years, and the market values just continue to go up. If the rates go down to say 5.5%, there's going to be more inventory, but it's going to be more buying power. So I think that the prices are only going to go higher. I don't think it's really going to affect anything. You look at different areas, there's no inventory out there, and as soon as the interest rates go down, it gives them more buying power.
This is what I'm seeing. I'm seeing buyers hesitate and want to collect some more money to get back in the market because they see it's expensive. But by the time they come back in, the price just went up so much further than they thought. They're chasing it. They're chasing the market.
Correct. And the whole thing is, like you said before, there's so many different ways you can structure it. Instead of putting down 20%, maybe you put down 10% on that house because you want to save that 10% to do some improvements on that house. Instead of sitting there, I have clients that want their mortgage payment to be a certain amount. They put down 20%, and then they end up in credit card debt. You know what I mean?
So this is why we kind of early on said, marry the house, date the rate, because if you're going to buy a house, get the house, take the rate you can, buy down the rate, whatever you have to do, and then you'll go back and refinance with them.
The average person has a house for 5 to 7 years. It's just like a mortgage. The same thing is like, you know what? When I close a client, I have a database of my client of what rate they closed at, and when it makes sense for them, I reach out to them. Right. It's got to make sense, you know what I mean, for them to refinance. But if you look at the trends, you know what? You can always refinance, and when you refinance, like I said, the costs associated with it are very minimal compared to what they would be,
And at the end of the day, you made the statement before, real estate's a good investment, right?
Yep.
And there's certainly moments that people hit the market wrong, but overall, historically, it's proven to be one of the most stable and rewarding investments. What we see, I often, when I'm showing sellers pricing for their house, I have charts that I could show them for their community for 25 years. And what we see is, over the 25 years, most of those houses triple in prices.
Right.
Even though they might have sagged a little, you're not likely to get in a house today. If you're going to stay in that house 20, 30 years, you don't need to worry about it. If you're looking to get in a house for 3, 4, 5 years, okay, maybe you should sit tight a little bit.
Right.
But
correct.
It's not going to go down. You're not going to get hurt.
But what about the people that refinance and say they have a 3% interest rate now? You could turn around and buy another house and maybe just keep that 3% interest rate and rent out your house, and keep that as an investment. I mean, like you said, real estate's the best investment. Talk for me. I've done all different things. I own different properties and stuff like that, and it's almost every house that I own has doubled every decade. And somebody told me that years ago, and I never realized it until I looked at the numbers, and every one of my houses is...
Oh, it's documented. We have charts. The last point I want to make is I had done a video a couple weeks ago. We posted it, and I was talking about wealth versus a renter versus a homeowner. And we had some charts, and it was 2-year intervals. And we showed the wealth of an average renter to be about $10,000. It went up to 10.6, 10.2, then leveled out at 10. And for a homeowner, they were building equity during the same time period. The average homeowner was at 416, and 450 in equity.
Yeah.
In fact, in New York State, people who own a home in New York State realized a growth in equity of $37,000 last year by doing nothing, by sitting on the couch and doing nothing. The value of their home brought them $37,000 in equity. It's the highest in the country. So even if it's a high interest rate, get into the home.
That's $100 a day, $3,000 a month, right?
Doing nothing.
Doing nothing.
Doing nothing.
Right. Doing nothing.
If your intent is to own a home, talk to your loan officer, talk to your agent, and get in sooner than later.
Yeah, correct. And like I said, as long as the numbers fit, I'm all about the numbers. As long as the numbers fit, it's going to be worthwhile for you.
This is a great talk. I appreciate your time today.
Thank you so much.
So, look who's in the house with Michael. We're on TikTok, Instagram. We have a YouTube channel, Facebook. Wherever. Charlie's posting me everywhere. We will put up Dave's contact information. If you have questions, feel free to give him a call, send an email. He'd love to talk to you. And that's it. We hope to see you soon.
Thank you for having me.
Thank you.